Evening, everyone. Evening. We'll get started in a couple of seconds here after we get situated. We need the agenda up on the screen. This will probably go a second. All right. Cool. Let's get into it. Welcome in. Welcome to the weekly analysis. You guys know the drill. We're going to be covering the S&P 500 futures and the NASDAQ futures, where we think we're headed in the next couple of days throughout this week, what setups we should be on alert for, all of those good things. So first things first, we always have to go into the economic calendar, see any catalysts we may have throughout this week, because those are important. That's where the market can have some really large jumps or drops. This week, we're going to be looking at Market Watch. Let's see real quick if Econoday wants to cooperate, because it'll be easier to read, but if not, then we're just going to have to read it off of Market Watch. And judging by how long this is loading, most likely it doesn't want to do its job. Yep. All right, let's go back to Market Watch. So starting off on Monday, doesn't really look like we have too much. Yeah, just factory orders. Don't really pay too much attention to that. On Tuesday, the 5th, we have the U.S. Services PMI. That's pretty important, as well as ISM and job openings too. So all of these will be after the bell on Tuesday, 15 minutes after the bell at 9:45, and then 30 minutes after the bell at 10 a.m. Coming into Wednesday, we have ADP employment, so like job numbers, good indication for if the economy is overheating or not. I don't think these two are very important. It's so much easier when you just have the red dot. So kind of going off of memory and just like what I'm familiar with that moves the market. On Thursday, we do have the jobless claims. That's definitely a market mover. That's going to be at 8:30 a.m. So an hour before the bell on Thursday. And then Friday, we have consumer sentiment, definitely a market mover. And then looks like we have some unemployment and just like job numbers as well, about an hour before the bell on Friday too. So a relatively busy week. Make sure to take note of all of these data points here. That way, nobody wants to be in a trade. Next thing you know, some news comes out, goes against you. Your stop loss can't hit in time. All those bad things, terrible things. I'm sure we all been there. Don't let it happen to you. All right. So now let's come on over into the charts. I'm not sure. There we go. All right. So here we are on the S&P 500 futures. We like to start off looking at this. We have our economic calendar out of the way. Let's go ahead and get started when it comes to the charts. So first things first, if we take a look at the weekly, right, we got to start with the higher time frames. As you can see, we've, of course, been on this crazy uptrend since about, I guess at this point, like 5-6 weeks now. But as you can see, the candles, they are starting to get like a little bit smaller and smaller the higher that price moves. And that's a pretty good indication that buying is starting to kind of get exhausted. People are trying to gauge whether or not they are in agreement like with price as we go higher. Buyers are starting to sit more on the sidelines versus down here, right? This was a huge discounted area. So of course, people are going to be interested at lower prices when it comes to the buy side. But the higher we go, the less participants are going to be interested. It's just like anything else when it comes to supply and demand. On top of this, you can see we're also coming up into this key supply zone at 4609. That's where, let's see, just your connection screen looks a little blurry. All right, hopefully it doesn't look that way for everyone. Let me take a look on mine. I guess, I don't know if that would help since I'm the one hosting it. Does anyone else have any issues? Or Maj, is it still looking blurry on your end? Hopefully not. I'm gonna just hope for the best and keep going. If anyone else is having issues, let me know in the live chat and we'll see. All right. So it looks like yeah, it looks good. It looks good. All right, cool. Let's get back into it. I'm clicking around over here. I lost my notes, so give me 1 second. All right, back to the S&P. So yeah, we're coming up to this key 690-minute supply zone. Starts at 46. Let's just call it 4610, and it would be invalidated right above this swing high. If we zoom out real quick, this swing high over here. Let me bring out my drawing tool. There we go. The swing high over here. And that kind of like is included in the supply zone as well. So it can also be used as like another layer of confluence if you are looking to short in this area, which me personally, I will be on high alert for shorting, as I mentioned a couple of minutes ago about how buying looks like it's starting to dry out. So if we take a closer look at this supply zone, right, you can see not only is it a higher time frame one, which makes it more reliable, but it also has several rejections since its inception. And another thing that I like to talk about with supply zones and like what in demand zones and whether or not they're high quality or not is by the reaction that we got from that zone, right? So when it initially originated, you can see we got this massive about 60-point drop off of it, and then once tested again shortly after, so one time on this day, the next day after that, and if we even consider this touch right here too, that's 3 separate days where we had rejections out of this zone. So that automatically deems it a higher quality zone, like where sellers are willing to step in and kind of take short positions, or if you're in long, people taking profits. Regardless, this is kind of an area where people are looking to sell. And so until proven otherwise, I'm going to be looking for another selling opportunity when the time comes. So if we come back over to present day, as you can see, we are not too far below it, about 15 points out. And if you even want to count this could be considered a rejection that we actually had this past Friday as well. So I'm going to be watching for another retest tomorrow when the market is open. Hopefully we can get a situation like this. Let me go to a lower time frame. Hopefully we can get a situation like this where we trade back up into the zone, maybe break above this previous high right here, right? Trap a bunch of longs back up above this 4,600 psychological level as well. And then once we get into this zone, I want to see aggressive selling to the downside out of this zone back into one of these demand zones down here, right? If you all know me, I like to take profits. If I'm in short, I like to take profits at demand. And if I'm in long, take profits at supply. So since I'm looking to get short, I want to take profits in either of these areas. And of course, I would be scaling out along the way down. But these are ultimately the areas that I'm kind of watching for. Cool. Hope that makes sense. Another thing to note about this supply zone, which I guess is kind of a good call it a tangent into our next point, which will be the NASDAQ, is the fact that the NASDAQ has been weaker this past week, especially, right? If we look at the weekly chart for the NASDAQ futures this previous week, so this green candle here, we had a doji candle, right? We had this huge, large upper wick, and this huge, large bottom wick, right? So price is starting to kind of stall out on the NASDAQ when it comes to like all the tech stocks, right? You can see this indecisiveness up here and down here, and ultimately we closed right in the middle. But the reason that this is important is the fact that, as hopefully many of you know, the NASDAQ is comprised mostly of tech stocks, and the S&P 500, at least the heaviest weighted names in the S&P, those are tech stocks as well. So as you can see, the NASDAQ, as this week has already started out, we're on this red candle. So if NQ starts showing weakness, right, and we compare this to the S&P, who has been rallying since last week, right? We have this instead of a large upper wick, we have we pretty much closed at the highs on the S&P, right? So now that we're coming up to this supply zone up here that we were just talking about, since the NASDAQ starting to roll over and we're already coming into an area where a lot of shorts are probably going to be looking at, this to me makes this zone even more quality than before because of the fact that the NASDAQ starting to stall out. It's comprised of mostly tech stocks. The S&P, at least the heaviest weighted names, are tech stocks. So if we start rolling over at an area where shorts are already most likely going to start piling in, that makes this zone higher quality for me personally. So that's why I'm going into this week on high alert, looking for short setups first rather than longs, even though we have been in an uptrend for the past 1, 2, 3, 5 weeks. If I were to be looking for shorts, it would be now because we are at this key zone. And as you can see, even on Friday, we got up to this area and we already started rejecting. So again, coming into tomorrow, definitely looking for something like this. Again, for us to trade kind of up into here, traps some late longs above Friday's highs, as well as us being back above 4,600, and then for the selling to commence back into these lower demand zones that we talked about. Now, of course, nothing is guaranteed in the stock market. We could just have a situation where we continue higher. And that is a real possibility, right? Like we just talked about, the NASDAQ has been a little bit weaker over the past week. So if we get a situation where the NASDAQ and tech stocks start gaining more interest from buyers, the flip side can happen, right? Since the S&P is at like the heaviest weighted names are tech stocks, if we start rallying on the NASDAQ and the tech stocks start doing that, then there's a good chance that the S&P 500 will also rally further as well. In which case, I would be looking for us to do something along these lines, right? Come up into supply, kind of start consolidating, showing signs of acceptance, and then giving us a breakout, at which point I would be looking for the retest of either just this upper zone up here and or just somewhere on top of this resistance, which I would want to see become support before we can look for a setup to the upside when it comes for longs when we're looking at the S&P 500. Cool. Hope that makes sense. So does anyone have any questions about our setups that we're watching when it comes to the S&P? If not, we can go over to the NASDAQ and start talking about that because we're right at our halfway point for tonight. Take a sip. All right. So now let's go on over to the NASDAQ. So if we take a look at this weekly chart here, actually one last thing on the S&P before I forget and we completely segue. Let's go back down to about this 2-hour time frame. Another thing that I'm watching for when it comes to us kind of flipping in market sentiment is this area down here, right? As I said, I'm going to start looking for short setups, but for me, confirming kind of like whether or not I'm long or short biased for sure, will be if we can breach this 4-hour demand zone on the S&P, which starts at 45.32. Specifically, us invalidating this right below this 45.20 level. The reason that I'm going to be looking for that is because it's going to be a break in market structure, right? This entire time, we've been making higher lows around here, right? Gaining demand, another higher low. Just consider all this another higher low, right? So for us to really start selling off into this area down here, that to me will confirm that the sentiment has kind of flipped, and now we're starting to look for more bearish setups and scenarios where we're looking to short the relief bounces and cover our shorts into these demand zones that will start presenting themselves as we make our way down. So keep that level on your radar, that 45.32 4-hour demand zone. Specifically, though, we want to see it kind of selling pressure really start to pick up and volume to the downside start to pick up around 45.20. At that point, I would say it's very clear where the market is starting to head. All right. So now coming over to the NASDAQ really quickly, let's take a look at that weekly chart. Like I said before, this past week, while the S&P 500 was very, very decisive, let me get rid of these drawings real quick. Like I said last week, the S&P 500 was very decisive, right? We pretty much closed. We can just draw a makeshift candle here. We pretty much closed at the highs when it came to the S&P. However, as you can see with the NASDAQ, it's not the case. We have this large upper wick up here showing that buyers really are not present above those previous highs that we had for 2023. So if we take a look at the current weekly candle, we're already, like, we pretty much opened and didn't see any upside. Granted, it's only Sunday night. We still have 5 more days to go. But as you can see, we've already started getting that continuation kind of to the downside. And if you remember from a couple of episodes ago, I was saying that when it comes to looking for kind of those high quality setups where there will be like good direction and continuation, you want to see the current week's candle exceeding the body of the previous week's candle. And that's already kind of what we're starting to see. We had a doji kind of last week, and now already on this current candle, we're starting to exceed the low of last week's doji. So I hope that makes sense in terms of when we're talking about the downside. All right, let's bring our zones back on. Let's drop down to our time frames and look at what setups we are watching. Maybe a couple more. All right, so first things first, again, kind of going along with that narrative that we've been talking about. As you can see, we already have 1, 2, 3 different supply zones that we've created on the NASDAQ in the past week. We don't see anything like that on the S&P. On the flip side, for the S&P, all we see is like new demand zones we created. Whereas the NASDAQ, we see a bunch of new supply zones that we created this past week. So already that should give you a clue that, like, okay, maybe we can start prioritizing more bearish setups rather than bullish setups. On top of this, if we zoom out just a little bit here, we can also see that this 16,000 psychological area has kind of been like a battleground that we've kind of been pivoting on over the past week or so as well. And as you can see, for the current week, we're already opening below the 16,000 level. So if we can really start getting some continuation down into these lower demand zones here, that'll be kind of the sweet spot that we're looking for in terms of really getting some bearish action on the NASDAQ here. Right? So what am I looking for going into this week? If we reset the charts, oops. Sorry about that. All right. So what am I looking for going into this week? Well, of course, like I said, I'm definitely prioritizing those bearish setups. I want to first look for us to, let me change the color of this. I want to first look for us to trade up into any of these upper supply zones, preferably this 16,051 level here, because it'll be a nice way for us to trap folks above these highs right here. A lot of people like to chase the previous day's high. So if we can trap folks up here, thinking that it's going to be like a breakout, and then sellers step in inside of the supply zone, we can really take advantage of this, and the selling can really pick up once we get below this 16,000 psychological level, and we can take profits down here at this 15,900 demand zone. So this is the first kind of like intraday setup that I'm looking for when it comes to the NASDAQ, but ultimately what I'm looking for when it comes to like market structure is very similar to what we talked about when it comes to the S&P 500. I would like to see us break below this 15,820 demand zone, which has been holding up pretty nicely since its origin, right? We had a retest here on the day that it formed, came back down, and pretty much day after day after day since it's been tested, buyers have been defending it nicely. On top of this, as you can see, we have this huge void on this CPI candle to the upside, to where if we get below this 15,820 level, it's going to be carnage. Like, it's just an air bubble waiting to be broken for true downside continuation. And even after that, we also have, again, this another huge kind of air bubble where there's not too much volume in this area as well. So this is definitely something to keep an eye on. This 15,820 area, it's a 30-minute demand zone, so not that high of a time frame. So it's actually a little bit surprising that it's been holding up so well. But yeah, if we can get below this, damage. Definitely going to be some damage to the downside. So that's ultimately kind of what I'm watching when it comes to a macro look at the NASDAQ. So if we were to take, I guess if we real quick go to like a 4-hour chart and draw like a macro view of maybe what I'm looking to happen this week, ultimately what I want to see is something like this, where we trade up into either one of these supply zones over the next few days, but ultimately I want to see us sell off, and it won't happen all at once. I mean, I guess it's possible, but more than likely it's going to end up looking something kind of like this, right? Where we'll end up making our way down like this over the next coming days. Most of like the drops that I'm looking for, they're going to kind of be spread out. Like the market isn't going to automatically move. What would this even be? Yeah, this would be like 400 points. So we're not going to get a 400 point drop, most likely all in one day. However, over the next coming days, this is kind of the scenario that I'm going to be watching for. Now, we've talked all about the bear scenario. Of course, there's always the other side of the coin. So let's go ahead and actually take a look at what that would look like. So dropping down to the 1 hour so you guys can see it better. As you can see, the most obvious kind of level that is waiting is that, where are my drawing tools? There we go. Is that 2023 high up at 16,250. This is naturally the next kind of area that we should gravitate towards if the tech stocks do start catching a bid and we actually start gaining our bullish momentum. And so what I would want to look for when it comes to that is for us to actually invalidate the 16,160 supply zone up above, right? So over the next coming days, right, again, we'll end up probably testing some of these zones. But ultimately, what I want us to do is invalidate these highs up here that we saw this past, what was this? This past Wednesday, and end up actually coming up and breaking out of these 2023 highs. Not going to all happen in a day, and I'm sure as hell not going to be chasing a breakout above this level, as you all probably already know. Instead, I'd want to see us end up breaking out, coming up, retesting this, and then moving up higher and to higher prices. That would be our bearish scenario, our bullish scenario. And if we take a quick glance, yeah, there's not really even, yeah, we haven't been this high since the summer. And before this summer, really our next kind of level above, meaningful level, would be damn near all-time highs. So yeah, if the tech stocks do start to kind of wake up, there's kind of an indefinite amount of upside when it comes to the NASDAQ. So definitely something to keep an eye out if the tech stocks do start waking up. All right. I think that's all we have on the agenda today that we covered. Yeah, it looks like we come to the end. So if anyone has any questions, go ahead and leave them in the chat and we can go over them really quickly. Other than that, this will be it for this one. Make sure to hit the like button and subscribe if you're new here. If you found any value in this video, we do these every single Sunday at 5 p.m. 5 p.m. Pacific, 8 p.m. Eastern time. And then on Wednesdays, we do them before the market opens in the pre-market at 8:30 Eastern Standard Time, 5:30 a.m. Pacific. So I'll be waking up early for you guys because you are my favorite people. Yeah, other than that, good luck trading this week. Make sure you stick to your rules. Make sure you have a plan, whether it's this plan or a plan that you came up with yourself. That's the most important thing. That's the only way that you're going to be able to grow is if you have solid plans. That way you can look back at those and see whether or not they worked out and any adjustments that you might need to make. If you're always kind of bouncing around, doing things without any type of methodical approach, that's where you look up and you say, oh, I've been trading for X amount of years or so many months, but I don't feel like I'm making any progress. And you start losing hope. But in reality, it's like you're not working efficiently. Like you might just be showing up and going through the motions and say that you have X amount of screen time, but if it's not quality screen time, it doesn't matter. So just make sure that you're showing up and you're being intentional about the way that you trade and actually, doing things the right way to put yourself in the best position to improve. So with that, I will leave you all. Have a great rest of your Sunday night, and I'll see you guys this week in the market. If you're in the Discord, don't be afraid to hop in, say your thoughts in the intraday chat either. Talk to you guys in the next one.